Hey guys, welcome to week 3. Getting close to the halfway point here. Just wanted to do a quick video to give everybody a little bit of a guide for what's expected this week. Starting off here on the homework grid. Everybody's hopefully come to appreciate these. Um, Looking at what's deliverable this week, we've got 2 assignments. One is in the Connect system. One is going to be in the Moodle room itself. 2 homeworks, and we've got a midterm. Midterm's going to be it's going to cover weeks 1, 2, and 3, so it's comprehensive up to this point. School says to allow yourself 25 hours of reading, study, work, and discussion forum time. So 25 hours. The other weeks so far have been 20. So keep that in mind. Everything's deliverable on June 14th, Sunday night. This is the problem, actually the assignment rather, in the Moodle rooms. It's 14.5a in your textbook. Um, Looking it over, doesn't look like too hard of a problem. The amortization table in number 3 may give some folks some issues, but I think it's pretty straightforward. So if you have any questions on it, let me know. I'm gonna jump over to the chapters, I think, here in a second. Here I am in chapter 14. Chapter 14's all about long-term liabilities. We start off with the concept of issuing bonds, and A1 is all about what a bond is, a lot of the particulars. I think these advantages of the bonds here are going to be quite helpful for you. So be sure to give all this a very good comprehensive read so you know what's going on here. On 579 there's some disadvantage of bonds, so keep that in mind and compare that to what we learned in the previous chapter on corporations and what we learned about their stocks and whatnot. Here at P1 they begin to talk about issuing bonds at par. That means at the stated cost of the bond. If you scroll down, we get into bond issuance at either a discount or a premium, and that's where it gets a little bit tricky, and you'll want to pay particular attention here to how a discounted bond and a bond at a premium work, and be able to distinguish between the two. After you get through the bonds that a company may have on their liabilities, you'll get to C1 here, which is long-term notes. Essentially, another type of long-term liability would be a loan that the company's taken on, and that's what this is discussing here. And just as you will have seen with the bonds, you'll have to be able to calculate the interest and the principal of the notes. And this is a good example here of a short little amortization schedule that you'll want to study and figure out the mechanics of it. So one quick note, while you're doing your reading, be sure to look at all the examples that they give you. Here on 592 is a good example of how to record an installment note and do a amortization schedule for that particular note. So it sort of walks you through that. So be sure while you're doing your reading to pay these things a good amount of attention, because it'll certainly help you when it comes time to do your homework. I've reached the appendix of the chapter 14 here, and I don't always suggest reading the appendix, but in this instance I do want you to pay attention to what they present here for you. And what it deals with here is the present value of bonds and notes, and I want to make sure that everybody's up to speed on the present value of a dollar. And it, in the book here, pretty much goes through these concepts for you again. If you haven't been introduced to these concepts, I want you to pay special attention to it. All right, I'm jumping ahead to chapter 15, which deals with investments and international operations. Um, Starting off on 624 here, it kind of gives you a thumbnail sketch of the basics of investments, the motivation for making investments. So give that a good read. I, that'll sort of open your eyes to kind of the opposite side of what we learned in chapter 14 with the bond issuance. Think about companies that in 14 we were looking at companies that were issuing bonds to generate cash. And on this side, you'll be looking at companies that are looking to invest in those bonds that the other company issued to make a profit. Exhibit below Exhibit 15.1 here that goes into short-term and long-term investments. Short-term investments are usually very temporary, um, and they're very marketable. So this is something that a company intends to turn into cash within a year or so, whereas long-term would be something that the company wants to hold on to for a good while. It's very similar to what we learned in probably an earlier course about short-term assets and short-term liabilities and long-term assets and long-term liabilities in terms of the time that that you would hold on to something. Starting on lower lower part of 624 and then into 625, that we get going on some of the entries that you'd see in the investment side of purchasing a bond. The first entry rather was the acquisition entry. So pay attention to this, and then and I guess what would come second in that sequence would be actually earning interest on the bond that you're purchasing. So that December 31st interest entry would when you start seeing interest revenue from that bond. So pay attention to that and kind of try to figure out how these entries work. Okay, we just saw that the entries for bonds held as investments. These would be the entries that you would see for stocks, securities held as investments. The first one on October 10 is the initial purchase of stock, and on November 2nd there is a dividend that is received. We learned about the other side of that on this past chapter. I think it was chapter 13, where we talked about companies issuing dividends. This is somebody receiving the dividend. So be sure to give these some scrutiny as well, and be sure to be able to differentiate those bond entries and these stock entries. Starting here in P1 at the lower part of 626 and then into 627, we get back to the concept we touched on earlier in the chapter where we were talking about current long-term. We start off with trading securities, which are uh, short term, and they're held for um, usually just a short amount of time. They're put on the books at cost, and then that we realize, or there's unrealized gain that goes into income on these securities. Opposed to those trading securities, we see in P2 held to maturity securities, which are also put on the books at cost. But these securities are amortized over the life of the security, and that amortized cost is what you actually see on the books. So it works almost like the depreciation on a long-term asset. I think the book says that's truly explained in a more advanced course, but that sort of gives you the flavor of how these work. And the third type of investment here is available for sale securities. And these are traded pretty frequently, so they're typically short-term investments, but Um, Unlike the trading securities that we saw first, any unrealized gains that are seen on available for sale securities are not reported on the income statement. They're actually reported as in a separate section of the uh, balance sheet, which is the um, which gets into comprehensive income, which is a little bit different type of concept, but I think we get into it a little bit later in the chapter here. I've said it before, but I do want you guys to really pay attention to these examples that they give you within the chapters, because it's very important that you guys understand how each of these work and understand the solutions to these, because it'll help you with the assignments as well. Starting here in P4, we get into the idea of not only holding investments, but holding significant influence over the company that you're investing in. So you'll want to pay attention to a couple different uh, types of um, secured or amounts of securities that you own in a certain company. The first one here is securities with significant influence, which means that you own uh, 20% or more, but less than 50% of a company's stock. And you'll want to pay attention to how that is presented and accounted for. Scrolling down, you'll want to, here on C2, on page 633, well, the next step up of that is actually having a controlling influence, meaning that you own 50% or more of a company's stock, and you'll want to pay attention to how that differs from the uh, the 20% to 50% that we just saw a second ago. The final part of this chapter on 639 here is dealing with international operations, and the discussion here basically centers around um, dealing with other countries' currencies while you're conducting business with your um, foreign operations. So give that a quick read. Um, it sort of gives you the flavor of things that you may encounter in more advanced accounting courses. But I think it's a good something good to think about. Having companies that deal in different currencies and different countries and how they deal with that, and and um, and how they um, account for that on their U.S. books. So something to think about. Give that a quick read as you wrap up chapter 15 here. I'm going to go ahead and wrap up the video for this week. If you have any questions during the week, if you need any help on any of the assignments, feel free to reach out to me. Always here for you. Always try to get back to everybody within 24 hours, usually quicker. If there's any issues along the way, be sure to reach out to me as well. Um, Look forward to seeing you in the discussion forums, and let me know if you have any questions or need any help.